What is poppin'? It is the Slapped, and I am but a lowly Slapped, and riding these ReFi waves. And this week in ReFi, where we give you all of the ReFi news that is fit to go ape wild over. Of course, with me is the man with the plan, the man regaining his summer tan in Bogota, the Estonian madman, Sir Rez.
Hello, it's me. Also, Bogota doesn't actually have better weather than Estonia. That's something you find out. Yeah.
Is that true? What does that mean?
Yes.
Is it cold?
Yeah, it's cold here. Like it's in the mountains. It's not particularly warm. It's 11 degrees Celsius outside, I think, right now. It's cold. Like,
11 degrees
you know,
Celsius. So for all you Americans out there, that means this degrees Fahrenheit. I don't know. No. So what
yeah,
is
what is that in freedom units?
in freedom
Yeah.
units? You have to multiply by 1.8 and subtract 32.
Oh my
I
God.
believe is what we have to do. I think that's how it works. Or add 32. I forget. It doesn't matter.
It's 51
Yeah,
degrees
so add
in
32.
freedom units.
1.8
Yeah.
and then add 32. Cool. We're going to talk about you being in Bogota briefly. And, well, why are you in Bogota, Rez? What's happening in Bogota?
Oh, there's Devcon over here.
Hmm.
So this is one of the biggest Web3 events in the world. It happens on a yearly basis. Historically, it's been in very nice places like Hawaii and Amsterdam. This time it is in Colombia, in Bogota, uh,
11 degrees
which is
Celsius,
cold.
which means
It's not exactly a summer, vacation place.
so if you're looking for indicators that we're in a bear market, Devcon is in a cold climate. That'll do it. So,
Yeah.
so I'm assuming there's a side. Are there ReFi people that you've been connecting with? I know some other ReFi people that went out there. What's the size of that community that's in Bogota right now?
In terms of people from ReFi who I know, I'd say there are about like 30 to 40 over here, so actually quite a lot. I've definitely seen a lot of people I've seen before, and I met a bunch of new people working on ReFi projects that I hadn't even really heard of. And I don't know, I'm pretty bullish. There were a lot of ReFi people here yesterday, especially since there was the Sustainable Blockchain Summit, SBS, which attracted a bunch of very interesting people. So I got to hear about even more insane ways to fix climate change, which I hadn't heard of before.
That's
Very,
awesome.
very interesting.
How are the non-refi people responding to the refi? So here's two questions, two-part question. How are the
Mhm.
non-refi people responding to the refi people? And are the non-refi people even aware of the refi people and the refi movement?
Yeah, I think it's probably the second. I don't think the majority of Web3 people even like realize that ReFi exists as an area.
Do you and
So
do they have interest? Do you try to explain it and like what has been their response when you're like, well, you start with the voluntary carbon market. Like, do they immediately say fuck off, or are they interested?
well, it's like, oh, interesting regulation. I see. Huh.
It's a lot to explain. I went out to I went on a hike with an old buddy of mine, not in this space
Mhm,
at all. He's crypto skeptic actually, and but
mhm.
he was nice enough to entertain my. He wanted to know what refi was, and I realized I hadn't done it in a while. What a heavy lift it is to explain what this space is because it starts with all sorts of knowledge about arcane things that like start with voluntary carbon markets. Like he was like, what's a carbon credit?
Yeah,
And then he asked me,
yeah,
is it bullshit? And I was like it's like, depends who you ask.
yeah.
um
Complicated
it
question.
is a complicated question. Yeah. All right, cool, man. Well, it sounds like you're doing well over there, keeping warm, and you're buying some nice party shirts, so that's always, I'm bullish on that. I like
Yeah.
that shirt. What's the deal with that shirt?
Yeah, this is official Devcon merch. So you got this for going to the main event, which happened in like a five-story convention center, which housed, I think, thousands of people. The main event was huge, but this was the official merch to celebrate the event, and it looks really crazy.
I
It,
like
it
it.
is truly a party shirt.
I would rock that. I like that shirt. That's awesome, man. So cool. Glad you're at DevCon. Now, if you guys want to be at DevCon, perhaps that would suggest that you would get into some sort of, I don't know, dev position. And what better way to look for dev positions in regenerative finance than refijobs.com? That is right. The best, as far as I'm concerned, the only regenerative finance job board free. If I believe if you are a job seeker and get high
Mhm.
quality jobs. Rez, you use this with Solid World
Yeah.
DAOD. What is your experience? We haven't talked about this beforehand, and so this isn't a canned response. What did you think of the service?
Uh, I'm the wrong person to ask about it.
Okay,
That's kind of a problem. Stanver handled the recruiting end when we were looking for a developer. We found a developer. I actually don't remember where we found him from.
that's right. I remember you
I'll
saying that.
need to ask him. Yes.
Okay, cool. Yeah, so I'll ping him. All right, cool. Let's jump into it. I think the story of the week of the day is Verra's
Mhm.
webinar. Verra is in the process of what are they calling a consultation period, and this was
Consultation period.
yep, and this
Yeah.
was yesterday, as time of recording this video, October 13th. There's a video I highly encourage everybody to look at. I think this video will be interpreted, misinterpreted, reinterpreted, argued about in this space. It's already happening. So, what better way than for us to interpret, misinterpret, reinterpret, and argue about before everyone else does? So, you had a chance to listen to most of it.
Mhm.
I had a chance to listen to all of it. Let's just I want to get your overall take. What would you say your takeaway is having listened to the recording?
Um, well, since I have this like gold standard, webinar to compare it to, it was, I feel, less cool than the gold standards, personally. But I don't know. It feels like I didn't necessarily learn much new, even though you did get some sort of a vibe of how we're thinking about things, which is still great. I mean, we maybe got let into a bit more into the brains of what's happening in Vera's head. Uh, but it didn't really like make me more bullish or more bearish. It just left me with okay type of feel.
I remember I was saying to you that it was an exercise in saying a lot and not, talking a lot and not really saying much. And to be
Mm,
fair, that wasn't the place for them to commit to you know, any sort of direct
opinion,
action.
yeah.
Yeah, it was their
Hmm.
their place to respond to questions and gather comments. So I think a couple things were particularly interesting was the
Hmm.
vibe of the comments because there were a couple of sore spots that got brought up multiple times in the questions and I would call them cheeky ways. And I do want to
Hmm.
give credit to the people. I forgot who was Benoit and I'm sorry, who was the other guy? Robin, right? Fielding the
Hmm.
questions. They handled it like professionals from the perspective of no question. They like they took difficult questions. They didn't deride the question askers. They answered them in good faith. I did like that, and there were some questions that you could consider antagonistic or provocative, and they just answered them in a matter of fact way. So good on them for that. But
Yeah.
I think that may have been the more important thing for me is to look at how the space is viewing Vera, rather even as opposed to how is Vera going to proceed because they're not going to tell you in that meeting.
Hmm.
And a couple sore spots. I want to get into I think one of the major sore spots. Um, During the webinar, it was mentioned that carbon may not be for what was called unsophisticated traders or market participants. And
Yeah, no, they said unsophisticated retail investors. That carbon isn't for unsophisticated retail
that's
investors.
right, specifically retail investors, and that brought some ire from the peanut gallery. Um, so the justification for this for protecting unsophisticated retail investors were that there were predatory or bad actors in the space, or could be, or have been, or all of the above, using misleading claims, misleading marketing claims, and that the retail investor would not be savvy enough and could be predated on. What are your thoughts on this?
I don't know. That sounds like everything. I feel like mm, isn't everything kind of like a danger spot if you're an unsophisticated retail investor? I mean, like what exactly is the safe bet if you're like that kind of a audience? And should anybody really be working hard to protect you from it? And if so, then what does that actually look like? Like, banning them from doing anything at all? Do we go to the American definition of what is it? Accredited investor, which just means you have money, like, and that's what makes you good. Like, you have money. I mean, I'm I understand the sentiment. I don't understand the implications of what does that mean for a market. What behaviors result from you believing in this? How are you going to behave around, let's say, retail investors in that case, right? Because I don't know. Like, I feel it's kind of weird of going like, hey, unsophisticated retail investors, they're not smart enough to buy our assets, so therefore we just need a system with no retail forever.
Right. I think that you a couple interesting points there. It's what does it mean to be unsophisticated? All right, so here's a really good example. We let people trade in equities in the United States and presumably everywhere in the world, most places in the world, right? You can buy equity of a company on a brokerage account. Does that
Sure.
mean that, and no problem, right? As long as you have a
Mm-hmm.
brokerage account, you're allowed to do it. Does that mean the people trading these equities understand how monetary policy, Fed rate hikes affect, macroeconomic conditions?
No, I think a lot of people buying stocks barely understand how to do discounted cash flow analysis or, like look at fundamentals or do stuff like this that you'd normally at least, attempt to do when you're trying to figure out is the price of the share currently worth it or not.
Right.
But
Or
yeah.
what about people buying houses? Do they understand the trends in real estate markets and whether they might be at the top of a bubble, right? Like, so what does it
Mhm.
really mean to be an unsophisticated investor? I would argue we are all unsophisticated investors to some degree in every market that we enter because there are an
Yep.
infinite number of variables and inputs. So, like,
Hmm.
to your point, the intention is clear. You don't want people to get ripped off, right? You do need some safeguards
Yeah.
for just like rugging, like you don't want that. But I do think it was a misstep to suggest that by nature of being a retail investor, you were unsophisticated. That
Hmm.
did seem condescending, and someone had brought up the word. What was it? Paternal, right? Like you have to protect us
Hmm.
against ourselves. Like there's risks in this, right? There's risks in investing in everything. There's risk in not having a complete picture. If we all had a complete information picture about everything, there wouldn't be any investing because everything would be at the proper price, right? The price
Yeah.
wouldn't fluctuate. It'd be set at the actual price. We wouldn't be going over or under, etc. So I think that was a maybe not the best use of words. And one more thing, Celsius, as an example, just listed the people who lost the most money in their protocol, and there were people who lost
Hmm.
$40 million. So if we use the United States definition of an accredited, sophisticated investor, these people who have a lot of money, well, they certainly weren't sophisticated when it came to something like Celsius, right? So I don't buy the
Hmm.
argument by that if you have a lot of money, then you're or look at the pension funds in England, right? And how they're asking for
Yep.
corporate funds right now to stave off margin calls. Like, are they
Hmm.
sophisticated investors? Or let's look at Lehman Brothers in 2008. Were they sophisticated investors? So this is my slant on this is like, I think it's a cop out. And I think I think often when we talk about sophisticated investors and accredited investors, it's a gatekeeping mechanism to keep people without a lot of money from getting into things at an advantageous
Hmm.
time. And I'm against it. So I think that was a
Yeah.
bad take. Anything you want to push
Yeah.
back on there?
Yeah, I think I want to push back on how Benoit like later on corrected the statement he made about unsophisticated investors. He essentially said that the main question was, are you working in carbon? Do you actually understand the market or not? Because well, he brought up a few very, I think, important things, which were quality standards, how they're evolving, and then there's the Article 6 situation, which we've talked about a few times on this podcast. Uh, so, on the quality side, they're just worried that if there's going to be new, publicly, widely accepted retiring standards for organizations where they go, like, no, you have to meet like these requirements, then somebody holding less valuable credits might see their assets even depreciate even more because the amount of use cases for this credit essentially, got smaller. And that's something that retail would need to understand in that case is, what are the emerging quality trends currently and how are those going to play out? The second half of this is the whole Article 6 situation, which says that after some point, once this policy starts getting implemented, all carbon accounting, until otherwise specified, belongs to the country the carbon event happens in. So that means if we're talking about some RED Plus, for instance, yeah, you could pick this up right now. But if we go 5 years into the future and you've just been holding this, are there going to be like significant use cases for people to want this if the country this offset was from has implemented some sort of Article 6 compliant rule and has explicitly said that no, hey, all RED Plus belongs to us. So I don't know. Uh, I don't know like what the right answer is in terms of all of this, but I think the answer can't be let's sit and wait forever while we start getting, new standards and shit, because especially if we're talking about Article 6, this is going to be something on a 4-year timeline probably. Like we aren't going to see everybody adopt Article 6 policies in the next year or something. That's not happening. So the next question is, do we have to wait like for until it's implemented so we could start making any changes? Because that seems insane to me. If we have to wait for a couple of years for that clarity to emerge, I'm sure we will have more new unclarity somewhere else. The whole market is very young and very volatile. That is true. But the implication that, hey, until there's more clarity, we just need to heavily limit the amount of people that can be involved. I think that's a very bad take considering the problem that is being solved.
Yeah, well said. That was also mentioned in the webinar. Someone had mentioned, said, "Well, what's the urgency here, right?" And you had brought up, well, if we wait for this to have clarity, there's obviously going to be something else that pops up in the future. But even beyond that, the question was, well, considering everyone saying, you included, Verra and everybody else, this is a impending climate emergency, and now it feels like, especially to people in the Web3 space, that we're sitting on our hands, right? Because we're used to a rapid pace of innovation, and clearly Verra has a different approach because they exist in a different world, a more traditional world. Yeah, I think that might be one of the biggest, that is and will continue to be one of the biggest points of contention at this point, is even more so than what are the regulations or what do you guys intend to do, is when will you actually do them so we have clarity and we can work with or around those things, right?
Yeah.
And that did come up. And so they are extending the consultation process to November 1st, which they mentioned. And it was directly stated in this webinar that to expect some sort of directive or guidance by the end of the year is unlikely. So we're looking into 2023, and then your guess is as good as mine about which quarter we're going to be in. We're probably going to be pushing quarter 2, quarter 3, right? So this is going to be a long haul thing.
Yeah.
So we'll see.
Exactly. It's not going to happen immediately. We're gonna be in here until quarter 1, I think, at least.
I think you're right. Okay, so we got that. A couple more things I wanted to bring up in this webinar that I thought were super interesting. There was talk around fractionalization. This is brought up several times in fungibility pools and derivatives and things like that. This was my take on it. People can disagree. It doesn't feel like Verra is too amenable to these things. It specifically says that fractionalization does not represent one-to-one credit to carbon ton, so it's not ideal. They said that they might be willing to change their conception of how this works, but they did not seem to be very bullish on fractionalization. And the other thing is, when you securitize, carbon credits currently are considered commodities. Like just a pure carbon credit is considered a commodity. But when you start creating derivatives off of it, and I'm going to give you an example, something like BCT, something like Klima, this is the opinion of the webinar, at least is my interpretation, is that would be seen as a security. And that, again, brings up all sorts of new regulatory concerns. So it doesn't sound like they were too bullish on that. But here's my question on that is, how do you even stop it, right? Like, how do you stop somebody from wrapping a tokenized carbon credit and putting it into a a fungible pool or to securitize it
Mhm.
in some way. Let's just say securitize as a not in a legal sense, but just in a practical sense. Like how would one
Yeah.
even go about preventing that from happening with code on Solidity? Any thoughts on that?
Yeah, very easy. Permissioned blockchains where you just don't let the bad actors in ever. Like you just have your own opinion on how things work. You don't let anybody else write any code. And then you have this like nice walled garden that basically creates very questionably limited value. That's how you would avoid anybody building on top of what you already have. And this is kind of the annoying part about like how a bunch of traditional people look at Web3, which is that they see this interoperability, this extensibility as a sort of risk and potential disaster for them, instead of seeing this as a landscape ripe for very cool innovation, right? Because if you view it as a risk, you're just not going to let anybody do it. Versus if you view it as a legitimate avenue for innovation, you'd be very excited for it.
Yeah, well said. So that was something that was brought up by Verra multiple times. It seems like their intention right now is to protect their reputation. They don't want reputational harm to come through bad actors. They don't want investors to be duped, and that would create reputational harm around carbon credits and carbon markets. And the last thing
Mhm.
was that they brought up money laundering, which got some very cheeky questions. They don't want the space to
Yeah,
be a space of money laundering. And fair enough. Like, nobody wants to facilitate money laundering. But the question is that reasonable that this would be a space for money laundering? I believe
yeah.
it was Robin brought up, well, hey, you can laugh, but there's money laundering and things you wouldn't consider, like stamps, wine, and fine art. So,
Mhm.
to what extent do you think we should be concerned with money laundering in the carbon market space on chain? How legitimate
Yes,
is that of a threat?
I like the examples he brought up because they're all untraceable. So we have stamps, wine, and fine art. These don't have traveling digital representations trailing them around, telling you who were the owners and how did that end up in your hands exactly. So I think blockchain is necessarily already like a worse mechanism to do any laundering because we can see where the assets came from. And if we don't see, that's a red flag, right? So then you have to do a lot more work to prove it. Uh, this is actually why companies like Chainalysis exist. They do AML for on-chain shit. They do forensic analysis on on-chain transactions, and they figure out if anything sketchy has happened. And if so, they can let you know as the counterparty that no, these guys aren't legitimate, and you should probably freeze their assets if you have the ability to. That's the approach that's the approach that has historically worked on chain. Also, this is the stance of the FATF, who are probably the biggest, nasty regulators in the market, who are telling people how to run regulation. They have this concept of an unhosted wallet, and your responsibility as an asset creator does not extend to tracking every single unhosted wallet. It only falls to you to do proper AML, KYC, and due diligence around customers that you interact like directly. So this would be, Circle, the creators of USDC. They don't need to know the identities of every single person on chain that owns USDC. They just need to know who owns USDC when somebody is coming up to them and asking, "Hey, can I get some actual dollars now?" Right? Uh, there is this sort of layer in between that, yes, that will be regulated, but the implication that somehow you can prevent money laundering by knowing every single identity in the middle, I don't see how that actually helps you, to be honest. Like I don't see what the outcome of that is going to be. Why is that a good thing? Why is that helping? But I don't understand that, to be honest.
And that really seems to be one of the fundamental pain points in this negotiation, or whatever you want to call it, consultation period. It's like, if that is the case, that everybody who holds these tokenized carbon credits has to be KYC'd, I just, again, it would be a shot at retail investors, right? So that's really the question: is to what level do we want the participation of retail investors to be? Because you can kill it almost outright if you require KYC on the
Yep.
entire chain of custody. Because currently, if you're bridging carbon credits, you need to be known, a known entity to Verra, right? Or even to hold them. I apologize. Even to hold them, you need to be a known entity to Verra. So they are going to know who brought every credit on chain. That is inherent. That is in the system currently. You do not need to be KYC'd right now to retire their credits. I do not believe, even in the TradFi world. So and
Well,
mhm.
the registry operator that's retiring the credits has to be KYC'd. There are a bunch of examples where the person actually retiring on the other hand and isn't necessarily like properly KYC.
Mhm.
They just get the benefits. Like if an airline offers you offsets, you're not necessarily, getting KYC'd heavily
Right.
at that stage in order to do that. Or if there's an API that provides offsetting services like Patch or Cloverly, there are these API services that provide, shop fronts a way to integrate into it, so you could do offsetting like directly in the checkout. Uh, at that point, I don't think anybody's like necessarily too well KYC. So there's this sort of bunch of examples already that, hey, you don't enforce these kind of expectations anywhere else, so why is this relevant here?
Well said. All right, and then one more thing I want to bring up, and this is the language used when someone specifically asked, "How will you deal with tokenized carbon credits that already exist?" And I believe they specifically brought up BCT or Klima or something like that. And this is the
Hmm.
language. That is not the intention to be retroactive in that sense. That's not our intention. This is not about punishing, just to be clear. It's to ensure that this market works. I didn't count the number of times Robin, I believe it was Robin, who said intention. That is not our intention. That is not our intention. Intention, intention, intention. Now, there's two
Hmm.
ways to interpret this. One way to interpret it is bullish because it's not their intention to punish people. I wasn't,
Hmm.
I'm a little bit more skeptical, and I'm not saying this. I'm saying that somebody who holds wrap state Klima to this day, so I have something to lose in this matter. I'm not saying this lightly. When I hear
Hmm.
people talking like that, I get nervous because what they did not say was we aren't going to punish these actors. What they said is
Hmm.
it was not and is not our intention to punish these actors. And it felt like a carefully crafted, deliberate use of language that is ambiguous.
Yeah.
What do you think
It's
about that?
like yeah, it's exactly. I think it's crafted in a way of just between the lines already saying like we will never legitimize on-chain supply. But saying that in a way of going like, well, we're not doing this for any other reason other than like I swear like we're not doing it for any other reason other than integrity reasons. And meanwhile, these integrity reasons that we're quoting aren't necessarily even true because you can't prove a single instance of like integrity issues right now. So like it's more of this sort of integrity fear issue. And well, let's be honest, I don't think they really want to legitimize a bunch of the supply on chain because they personally just don't want to be associated with it anymore. But they were the people that certified and verified and issued these credits to begin with. So then there still comes the question of well, why is this everybody else's problem if like the underlying reasons feels like you regret the job that you did.
That's a good point because if you wanted to point to, let's say, some reputational harm, you could point to something like HFC 23 ending up in the BCT pool. But at the end of the
Yep.
day, Vera would have to own the fact that they issued those credits, which is
They issued those credits, and even when they discontinued like the methodology, it's not like they clawed the credits back. They still allow you to retire these on the registry in order to claim a footprint, something. And additionally, still get the Vera stamp of you can get the Vera stamp of approval, going like, no, we were using Vera certified offsets. Like all of these parts were never retracted from the HFC 23 situation. But this, I think, provides them a really clean out of going like, hey, these offsets, we're moving past it. It's not our problem.
good point. All right, so we'll see what happens. Obviously, November 1st is the extension of the consultation period. You can still send them emails. I do give them credit for being public with this webinar. I do give them credit for fielding difficult questions. I do not, we don't know what's going to happen. These are just our
Yeah.
opinions, obviously, not financial advice. So there you have it. Anything else you want to talk about before we move on with the webinar,
Uh,
this whole thing?
yeah, no, let's. I think let's move on.
Okay.
We'll I think see a bit more comments around this emerge over the next couple of days. I think.
Let us know in the comments of this video how you feel about the webinar. Really would like to hear your viewpoints. All right, next thing you want to hit is in fact the Klima DAO. We've mentioned them a couple times. They've released a carbon dashboard that I was looking through. Did you have a chance to look through it at all, Rez?
Yes, they updated the first page of their carbon analytics thing. I am very proud that more data related stuff is becoming more accessible. Very bullish about that.
You're more sophisticated in this field than I am. I dabble, but this is what you do. I liked the pretty graphics. I'll give the creative team.
Hmm.
It's accessible for people, for the layman. It looks like. I
Hmm.
didn't dig in too far. To what level of granularity can you get into this? It seemed like it was boilerplate from what I looked at, which is fine. I'm not putting it down. I'm just like,
Oh, well, on the tabs on the left, you can get into a bit more details everywhere.
uh,
Yeah, and
oh,
I'm
down here, like
pretty.
if I go into BCT pool, you can like,
Yeah,
okay, got you,
yeah.
got you.
It's pretty cool. I helped a bit at the start with a bunch of these things,
Oh,
so
here you
like I'm
go.
kind of familiar.
Oh yeah, you actually can see the BCT pool composition. That's really cool. Yeah, I should have looked at this
Yes,
earlier. Yeah, that is very cool. So there is a level of, yeah, very good job by them, I would say.
yes, good job.
What would yeah, is that your opinion as a data scientist?
Yes, as a data scientist, very bullish. Like a lot of boilerplate visualization code was forked from me, so I'm pretty happy
Ooh,
about that.
nice.
Yeah, I get to see this in like a production context. So good job, like actually putting all of the data together, Clemo people. Like this looks very good.
Yes, very well done. And so, going back to that webinar, this would be a argument in favor of tokenizing because hey, we can do this with blockchain.
Yeah,
Once you get these sorts of this infrastructure set up, I would imagine it's trivial to call on it, right, and to populate these,
yeah,
which is wonderful. So we can have transparency and it doesn't take a whole lot of
hmm,
time, which is a upgrade over the current system. Very
exactly.
cool. All right, and the other thing, well, we're in a klima mood today, so let's get into this. SushiSwap has
Hmm.
on the Polygon chain. You have to be in the Polygon chain. Remember that. So make sure you're on that. If you go to settings, and I will demonstrate it, you can do carbon offset. You can turn it on, and once you turn it on, you can offset your transactions on the Polygon network.
Hmm.
What do you think of that, Cerez?
I think it's the dream of the money Lego becoming manifest, and I love it. Like it's one of these like few early use cases we've seen where a protocol directly embeds offsetting into their system. I does it say what you're offsetting with? Is this like BCT only, or can you like pick something, or how does that part of it
You
work?
know what? I haven't played with it to that degree, so I'm going to claim ignorance. Let me see if I can
Mhm.
make sense of it. I have no idea. So, something to experiment with. If you guys are watching, go experiment with it. I would imagine they give you an option to offset with different assets, but
Mhm.
even if they didn't, it's a step in the right direction, or a step in the direction of building right blocks, as you said, and legitimizing the use case for permissionless chains and people to innovate on top of other people's work,
Mhm.
which
Exactly.
yeah, you know,
Yeah, and
mhm.
it's opt-in. Part of me kind of wishes it was opt-out, but cool.
Yeah.
I get why they didn't do the opt-in,
Mhm.
or sorry, the opt-out version of it.
There you go. Well, that was pretty sufficient. One thing I wanted to bring, this is just like interesting. The conversation we had, it has appeared to me or dawned on me a couple times that the fundamental kind of push and pull right now on the webinar and Verra consultation is the cost benefit of freedom and security, right? Which
Hmm.
we've seen this a few. I mean, this has essentially been the struggle of societies maybe forever, but certainly over the last 100 something years. It's to what degree should we be free? And that just doesn't just mean citizens. That means market actors. That means what level
Hmm.
should we be free to, you know, innovate off of other work? What level should we be free to do these? And then what's the cost of that in terms of security, right? So right now, Verra's taken the
Yeah.
position that they would preference security perhaps over freedom. And clearly, people in the space, we get into the space because we've preferenced freedom over, to some degree, security. And so that seems to be the fundamental disagreement right now, or the fundamental push and pull happening in this space.
Hmm. Yeah, exactly. It's a sort of push and pull about like freedom to innovate versus protection of the people that are going to participate. So like how much uncertainty and this kind of chaos are we willing to accept as a community? Because well, I am very pro chaos, but I know that a lot of people aren't. So like that's sad for me.
As I have a saying, I say, chaos is my milieu. And I think a lot
Mm.
of people in this space feel that way because it's a chaotic environment. Like, if you can't,
Yep.
to some degree, you don't have to like chaos, but if you can't, to some degree, manage chaos in the
With it.
space,
Yeah.
you're not going to be able to function because it's chaotic. Look at what's happening. Um, cool, man. Any final words? Any thoughts about anything? Bogota, refi,
Yeah.
Bogota.
Uh,
Bogota.
Bog,
Bogota
Bog,
is the correct.
Bogota.
Bogota.
Bogota. Yeah. Well, try and work on your tan before it gets too cold because we're heading into a very bad winter, and I hope everybody's prepared for that.
You right, man. We're heading into crypto winter, weather winter, hopefully not nuclear winter. Fingers
Well,
crossed.
hopefully not nuclear winter, probably energy winter. Not
Energy winter.
not not very good. Yeah.
There you go. All right, get your tan going. All right, I'll catch you all on the next one. Remember
Yeah.
to ape responsibly. Peace, dudes. Dudettes.
Peace.